Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, May 30th, 2019. So I want to touch on some stocks that I think, even though I think the markets will head lower over the next month or 2 months, I think are actually good bounce candidates. Number one, U.S. Steel, folks. Take a look. So obviously the trade war is impacting this astronomically, but at this stage of the game, this is priced out to be a worst case scenario. I don't think it will be. I don't think Trump will let it be because he cares too much about the stock market. He doesn't want the economy to start to tank going into the elections next year. So this to me is a no-brainer. You can see 1, 2, 3, 4, 5, 6 down days in a row. In fact, today it's starting to have a little bit of a reversal intraday. If I flip to my intraday 10-minute chart, look at what's going on here. Smart money starting to buy. I joined the fray here with some call options today near the lows of the day. Those are starting to perk up a little bit as well. And again, to me, this isn't a long-term hold. This is a swing trade. But I think a bounce back to 14 or 15 is very, very likely before the next wave of selling comes in as the U.S. economy. So the way I view it right now, folks, just so you are fully understanding, is that right now the market's being driven down because of the trade war, which then is making people feel poorly about the prospects for the domestic economy. We know the global economy is obviously under pressure the way it is. But I think what you'll see is you'll have a rebound as people see some progress on negotiations again. That'll help lift stocks like U.S. Steel up off of these lows and get the markets to really rally up a little bit. And then I think down the line, you're actually going to see the poor economic U.S. data continue to weaken, and that's going to freak people out even more down the line. So it's kind of a short-term upswing in some stocks that are really beaten down, and then ultimately, after a bounce, they probably do head a little bit lower. A couple stocks that I like that aren't just U.S. Steel, because I have a long list here. Just to give you a sense, Goose, this is actually a really interesting one. Look at the bounce on Goose, by the way, nearing 36. This is a great bounce. We've traded this in the intraday stock chat, and I love the bounce here. But I want to show you one thing. So yesterday, check this out. Yesterday into the end of the day, the stock was trading, basically 30, 40 minutes into the end of the day, it was trading near 36, which, by the way, it's right into that same level now. If I put a trend line, look at this. And then a fund wanted to exit their position. They didn't really care the prints they got. They just wanted to dump. So they probably dumped, a couple million shares here. Drove the stock price down. This morning they had a little left to sell. You could see it popped up and it sold into it. They sold into it. Once they were done, look at what happened. The price came right back. I mean, it's almost like the equilibrium price is right around 36 here in the short term, and the fund selling pushed it down because that was forced selling. But ultimately, it could have been even a margin call for all we know. I mean, the stock was down so tremendously yesterday. But notice how the stock has come right back to that level. And again, I actually think it will break above this 36 level. I think it has a good chance to get back to as high as 38 in the coming days. But again, I thought that was really fascinating. I talked about it with intraday stock chat members here about how you saw the fund selling end of day. It was very apparent because you could just see them hitting. I mean, it was massive volume. You could see the volume spiking here, all the way up, and there was no caring of price action. I mean, there was no like, oh, it's cheaper now, let's buy, and let's stop selling. They just wanted to get out of their position. It continued again. You could see how it popped up this morning. They sold into it, popped up, a little bit of selling, and then here's right where the selling stopped. Once investors saw that they were done, price that was bought up or stock was bought up, driving price back to that flat line. So Goose, overdone short term, but only upside to, I would say, about 38 in the coming days. Still a nice $2 bounce left in the stock to the upside. Don't forget Uber reports earnings after the bell, Nutanix as well. So 2 stocks there. A couple other stocks that I really like that have been beaten down: Mylan and TEVA Pharmaceuticals. Now these are risky ones. So let's go to TEVA here. So TEVA staged a really impressive reversal yesterday. So really impressive reversal. Was down, making new multi. I mean, look at this. I mean, this is ridiculous. I mean, you can go back a long time, and this hasn't been down here this low. But again, the reversal yesterday was powerful. It was on good volume and powerful in many technical ways. Now, what was interesting is today we saw the stock downgraded, which pushed the stock lower again. To me, any idiot analyst who downgrades when the stock is, I mean, look at the chart. I mean, now you're downgrading. The stock was $25 just a few, less than a year ago. Now you're downgrading. I mean, really? Come on. But my point is, there's 2 ways to look at it. One is the analyst's an idiot, and that's the easy answer. I don't know if it's the right answer, but it's the easy answer. The other way to look at it is that the analyst is trying to keep price down to let their buddies in their hedge funds accumulate. I really truly believe that goes on quite a bit on Wall Street. You think that these analysts are just looking out for the good of the common investor? Not even close. So keep that in mind, is that sometimes when you get downgrades at dead lows, multi-year lows, and you say to yourself, what an idiot analyst downgrading at, when the stock's down already 75% in a year, it may not be just a clear cut, yeah, they're downgrading. It may be because they want their buddies to accumulate. They need the sell pressure of panicked investors to allow their fund buddies to accumulate 1 million shares. I mean, this traded almost 20 million today, so picking up 1 million shares is not outrageous, in my opinion, not even close. So keep that in mind. But again, this stock I like. I like the reversal yesterday. The retrace today gives you an opportunity to get in pretty low. The way you can utilize it is any daily close below yesterday's low, you would just stop out. So, I mean, it's really a tight, I think that yesterday's low was just above $9. So, I mean, 20, 30-cent stop would be probably fine. Remember, it has to be a daily close below, though, not an intraday. You don't want to see a break intraday and then exit, and then it bounces up by the end of the day and saves this low pivot reversal, low pivot. All right, so just little things like that. Mylan's another same case scenario. Yesterday, reversal, it's back down almost to those lows. I think the chart-wise Teva is a little bit more interesting to me here, but Mylan, they trade together, so it shouldn't be a big deal. A stock that I've really talked about quite a bit recently of being a big fan of is Intel. I love Intel's performance. While the markets have gone lower in the recent days, look at how Intel has actually been a leader, and I have some trend lines, former trend lines here we don't really need anymore. But again, here was your pivot low. Look at the reversal. So this is this is an awesome kind of educational piece right now. You just saw the Teva chart. So let's go back to Teva on the daily chart. Look at this. Look at the reversal day and then the retrace. Now go to Intel, a week ago. Here's your down new lows, multi-year lows, 52-week lows. Look at the reversal. Same as Teva had yesterday. Then look at the next few days. It retraced, and then look at it start to creep up again. You see that? So this is almost and the beauty thing about charts is that they rinse and repeat. They repeat over and over again. Whether it's the same stock or a different stock, mentality and psychology of investors is something that always repeats. And this is a great example on Intel, how it mirrors Teva. Now, Teva and Intel are way different companies. You could argue under way different circumstances, which is true. But either way, they both had horrible news that has driven them down, and they're starting to try to put in some lows. So it'll be interesting to see. I think Intel has an upside to about 46 short term. If you look out a month or so, I think it gets back, maybe in a month or so, gets back close to $50 up here. On Teva, percentage-wise, there's more upside, but there's a lot more risk on Teva too, which I think is important to understand. This one is much more volatile than Intel. I mean, obviously, it's down much, much more percentage-wise. Intel's down, 30% or so off the highs. This one's down, from the 52-week highs. I mean, you could arguably say, I guess you have to go back here. This thing's down from 25 to 10. That's obviously a lot more than 30%. So be aware of that. There's risk differences between Intel, obviously, and Intel's old trusty Teva is obviously high risk, but still the chart setup can be the same. While you can make more on the upside, you can also lose more on Teva. So, I mean, it's a give and take. You have to be understanding of the risk versus reward of that trade. One stock that I think is very interesting, KHC. So KHC has a bunch of issues. They continue to say they're going to have to restate past year earnings and so forth. From what I know, they've been postponing their earnings release until I think now it's slated for June 5th, 13th or 14th. You can see it got a downgrade, some negative chatter, and then a downgrade today. So another same situation of where you got a downgrade. I actually picked up some calls today here at the lows because I'm a big fan of seeing a chart that's. I mean, look at this. This is Kraft Heinz. It was $100, a year and a half ago. I mean, even just going back to last right here, June, July. I mean, this thing was trading at 65. It's now at 27. I mean, for this company, it pays a 40-cent dividend coming up too. That's a big drop. Here you have a 3-bar search, 1, 2, 3. I want to give it a shot here based on the fact that it got a downgrade or a price target lowering today, which is why it's down. I still look at it and I think that it will have some sort of snapback bounce. Again, this is Kraft Heinz. We're not talking about some fly-by-night company that could be out of business tomorrow. Yes, they have some major issues, but these are the types of things that give investors opportunity, and I love opportunities. When I see the whole world, the whole investing public one-sided on it, hating on a stock like Kraft Heinz, that gives me intrigue, gets me interested. Then I do a little research. I look at the chart, I look at the fundamentals and so forth, and ultimately get me either to stay away or it might get me to get invested in the company. So we'll see again how it trades out, but very fascinating price action there. And again, I would not be overly shocked to see a little bit of a bounce back. I think this heads, so the big resistance you're going to have is right here. So, I mean, if you look right here, let me just put in this trend line. So see how all these lows right along this line. So the snapback should go back to about 31.5, which is nice. I mean, that's $4, $4 of upside on a snapback. I think their earnings, I think the market and the investing public is preparing for the worst case scenario here on Kraft Heinz. Generally, the market always fears much worse than it actually is. And that's my guess, too, is that once they do report earnings, you probably see a snapback to that $30+ level. All right. On that note, I'm going to bid you farewell, folks. But again, we just continue to take more profits in the options alerts. The research center is the same thing. Unbelievable track records on the research center. It doesn't get much better than that. Let me see if I can show you both of them real quick here, folks, because again, it's just stellar. Just bear with me while I bring my browser into focus here. Here's our website. Here's the options alerts, the research center options alerts. You can see right here. If I move it over, you can see the track record. I mean, this is just incredible. I mean, we do have some losses in there. Obviously, you're never going to win 100%, but incredible. If you put all your money in every trade, you're up 1,000%, basically. If you want to see the Research Center track record, you go over here. Research Center is to me, this is the more impressive one. Options, you can always hit or miss. I mean, you're either going to have a cold streak or a hot streak. Generally, we have obviously more hot streaks than cold streaks, but still, you can have a couple, that expire worthless. But this is just consistency. 10%, 11%, 6%, 13%, 7%. I mean, it's just consistent, grinding it out, and you can see a few losses in there. What I love about the losses here, relatively small comparatively, and again, all your money in each position, you're up 220%. Even if you put 10% of your money in each trade, you're still up, 21, almost 22% for the year. There's no fund out there, folks, that's up that much for the year so far. We're on pace to be, as a conservative investor, be up about 50% for the year, which is incredible. All right, guys, come join us. Take the 7-day free trial. We hope to see you soon. Take care.